This week's example of a closed swing trade in this life journey of a real money swing trading US stock portfolio is Amazon.com. This swing trade in Amazon was open for 149 days or 21 weeks. It was opened on the 26th of April 2023 and closed only just last week on the 22nd of September. The profit that was contributed to this portfolio was $3,172, and the net profit percent net of commissions was 22.89%. Now, the time taken to decide to do this trade back in April was seconds. Then seconds each day to decide to hold for the entire duration of this trade. In fact, I was traveling overseas at the time of entry, and for the first 2 months of this swing trade, on a 3.5-month holiday in Africa and Europe. And lastly, it took only seconds to decide to sell last week. I'll explain a bit more about that in a moment. But firstly, just looking at the chart of Amazon, let's start top left. You'll see a red arrow there, which is when the last trade would have been exited prior to this one. And the next entry that was displayed was the green arrow in the middle of your chart. And then we exited at the top right hand of the chart where you see the red arrow. Now, the controlling indicator through this, which I'll talk about in a moment, is this ATR trailing stop line. Now, it's not the normal one, it's a highly modified one through research that we've done over many years. Before we get into that, what is the swing trading mechanical edge for Amazon? Remember, swing trading means holding open trades for many days, even several months. That is not day trading, and primarily uses technical analysis techniques and indicators to determine when to buy and when to sell. So let's have a look at some of the key mechanical edge stats for Amazon to understand why we did the swing trade, and with so much ease and clarity and so little of our time spent doing analysis and researching when to buy, hold, and eventually sell. Looking at the numbers that you have on your screen, you can see that 72 total trades. What does that mean? That means over the life of the data that we have here, which is some 31 years, 73 trades were done mechanically with the buy, hold, sell algorithm that we use, which I'll explain a bit more about in a moment. The average hold period for all profit and loss trades was 78 days, meaning 11 weeks, and the average profit was 11.89%. The win rate, there were 53.42% profit trades, and the payoff ratio, which tells us that the average size of profit trades compared to the average size of loss trades, was 4.42. That is 4.4 times bigger for profit trades compared to loss trades, giving an expectancy of 1.89. Now, you can read up on expectancy if you've read any of Van Tharp's books or any other people that research mechanical systems. You'll get to understand expectancy. It's a key metric. Now, I won't go into all of these other numbers. I just want to go down to the bottom here to show you that the average loss trade was 6.28%, and there were 34 of these, and the average hold period was 38 days, including weekends. And the average hold period for profit trades was 114 days, yielding 27.74% on average per trade, and there were 39 of those. Now remember, this trade lasted 149 days and yielded just over 22%, so a bit longer than average and a bit less than average in terms of profit. Now, what is the significance of these metrics, and how can they be so exact? Well, the significance is that we understand from historical data that is all kinds of that happened with Amazon, that there's an edge. There's a mechanical, statistical, probabilistic edge. And that's what gives us confidence to only take seconds to decide to buy, seconds to decide to hold each day the swing trade is open, and seconds to decide when to sell. So there's no research or ambiguity or reading of newsletters that's done to make these daily decisions. All of the research and all of the decision making in what these criteria, the decision making criteria, happened years ago, and we are now just executing that edge, taking us so minimal time to actually execute these profit trades like this. Sure, there are loss trades too, but the payoff ratio tells us that they are much, much smaller than what the profit trades are, and that's what gives us the edge that we have our confidence in. And secondly, why are they so exact? Well, they're so exact because the entry and exit signals are mechanical. There's no debate about the existence of an entry or an exit. There's no ambiguity about the existence of an entry or an exit. They happen on a particular day according to precise and exact criteria, and then we act on those criteria. So that is how we can know that these statistics are meaningful. What 2 swing trading lessons can we learn today from this trade and from the other videos we've published so far on this YouTube channel? Firstly, which technical analysis indicator is the best and simplest for swing trading? Well, the one that we use is the ATR, that's the average true range trailing stop. And this was originally invented by Wells Wilder back in the 1970s. You can buy a very expensive book to work out how he came to the calculations for this indicator, or I'm sure you could look it up online somewhere. And Chuck LeBeau and many other mechanical traders have used this indicator as part of their mechanical systems. But we've also used it, and we've modified it to allow different categories of volatility within the calculation of the indicator, and then apply different parameters for each category of volatility. So our task in our research has been to work out what the ranges are for those categories of volatility, and then what the parameters are for each category of volatility. And that also differs per stock, because different stocks have different characteristics, and those characteristics from our research persist. And that is why we are able to trade with confidence into the future based on the research we've done in the past. So that's a little bit about the indicator. And looking at this chart, you can see the ATR trailing stop line trailing the trade up as the days go by. Now you can also see that the green arrow started after the breakout occurred to the left of it. And the reason for that is that for this trade actually had a filter applied to it. And we have two public portfolios. One uses the stock filter and the other one doesn't. So that is a customizable parameter, technical indicator if you like, technical filter that you could use for your portfolios as well. But the key point is that once it's decided, you write that into your investment plan, and then you continue to execute going forward with those selections made. The second lesson is swing trading psychology. It's so easy looking at a chart with the benefit of hindsight and seeing what should have been done and what could have been improved for just this one example of a real money trade. However, a swing trader is faced with a decision to be made each and every day during the life of a swing trade. From the day a trade entry setup is recognized, then every day the trade is open to decide to hold the position, to the day the decision criteria are met to exit the position. The more subjective and indecisive the trader's buy, hold, sell criteria are, the more difficult, time-consuming, confusing, and open to outside influence the task is of making these important daily decisions. Being subjective and open to outside influence sets up the swing trader to make mistakes, be unsure, and be hesitant, which repeats in many other trades. Making just a few big mistakes due to often changing your mind from lack of confidence in yourself and your method can decimate stock portfolios. The more objective the swing trader's buy, hold, sell criteria, the easier, less time consuming, and unwavering their decisions are. This leads to acquiring the most important swing trading psychology skill, that of consistency. And you can read up on this in numerous books, one of which is Trading in the Zone, written by probably the world's most effective trading psychology coach, Mark Douglas. I'll leave it there for today. Please subscribe to this channel and click the bell to get notified when we regularly publish other videos. I'm Gary Stone, founder of Sharewell Systems. Until next time, I wish you consistent and objective stock market investing.